Welcome back to Rekt Radio, the one and only show where we see a world panicking about paper assets and smile because we know true ownership is digital, decentralized, and unstoppable. I'm Sunny, and folks, the mainstream is finally getting the memo.
And I'm Cole. I'm here to remind everyone that when a 30-year-old memo about the sky falling gets re-released with the word Bitcoin scribbled in the margins, it's not a paradigm shift. It's just a new marketing campaign. Let's get into the news before the fear-mongering hits a fever pitch.
Fear-mongering? Cole, that is education. We have Robert Kiyosaki, the author of Rich Dad, Poor Dad, a man who has taught millions about financial literacy, out there shouting from the rooftops about the exact principles this entire space was built on. He's warning people about the dangers of paper assets, paper gold, paper silver, and yes, paper Bitcoin. He's telling them to hold the real thing. This is a massive on-ramp for the self-custody revolution.
Sunny, Robert Kiyosaki has been predicting a giant crash since the 1990s. He's not a prophet. He's a professional doomsday prepper who sells books and seminars as survival kits. He just found a new shiny apocalypse to tack onto his sales pitch. What does paper Bitcoin even mean to his audience? He's not creating clarity. He's creating confusion and panic, which, conveniently, is the perfect emotional state to be in before you buy one of his products.
You're missing the forest. The message is what matters. He is hammering home the point that if you don't hold it, you don't own it. That's the core ethos of crypto. He's steering his massive mainstream audience away from just getting exposure through a number on a brokerage screen and pushing them toward understanding the importance of holding the actual asset. He's turning his followers into future diamond-handed HODLs who understand the difference between a promise and a possession. That is profoundly bullish.
It's profoundly muddled. He's telling people the entire system is about to implode in a giant crash while also telling them to buy assets within that same system. It's a perpetual motion machine of fear and greed. This isn't about education. It's about keeping his audience in a constant state of anxiety. He's not building an on-ramp to a new system. He's just building a more elaborate panic room and charging admission.
And that panic room should be filled with hard assets. That's the point. But okay, if the macro message from a financial guru isn't your cup of tea, let's look at the cold, hard charts. The market itself is telling a story of incredible resilience. The bears keep trying to push things down, and the bulls are just absorbing it all.
Oh, is absorbing what we're calling it now? From where I'm sitting, it looks less like absorption and more like a boxer taking body blows, hoping the other guy gets tired before he keels over. What imaginary strength are you seeing today?
It's not imaginary. Look at Ethereum. The bears managed to drag it down, but the bulls are fiercely defending that critical support level. That's not weakness, that's a line in the sand. It shows that buyers believe in the value at this price and are willing to step in with force. They are protecting the trend.
They are desperately trying to prevent a waterfall. Defending a level is a bearish action, Sonny. It means the price is already down there in dangerous territory. The bulls aren't on the attack, they're in the trenches with helmets on, praying the bombardment stops. The sellers are the ones dictating the action, pushing the price down to a point where a defense is even necessary.
It's called building a base. And it's not just Ethereum. Look at Solana. The chart shows it's been consolidating right under a major overhead resistance. It keeps knocking on the door. Every knock weakens that door until it finally breaks open. The longer it consolidates like this, the more powerful the eventual breakout will be. It's a classic sign of energy being stored for a massive move higher.
Knocking on the door and being told no repeatedly is not a sign of strength, it's a sign of failure. It means the buyers don't have the conviction or the capital to push it through. Every time it gets rejected from that resistance level, it's another victory for the bears. They own that ceiling, and the bulls are just tiring themselves up by jumping up and hitting their heads on it. This isn't storing energy, it's proving weakness.
You see weakness, I see persistence that's about to pay off. And speaking of persistence, how about the king of memes, Dogecoin? It's been trading in a super tight range, coiling up like a spring.
Everyone who was gonna sell has sold. The weak hands are gone. What's left is a dedicated community and a chart that's primed for a volatile move. And in a bull market, that move is up.
A tight range doesn't mean the sellers are gone. It means the buyers are gone too. It's a ghost town. The party is over, the music has stopped, and a few people are just aimlessly milling about because they forgot where they parked their car. The coin that was supposed to be all about hype and momentum now has neither. It's not coiling for a breakout, it's flatlining from apathy.
You can't be this negative about every chart. This is a market-wide picture of strength, consolidation, and preparation. But I know what will settle this. We have to look at the big boss, the market leader, the one that sets the tone for everything else. Let's pull up the one-day technicals for Bitcoin on TradingView. The data doesn't lie.
Finally, something that isn't just wishful thinking painted onto a candlestick chart. I've got the dashboard up. The numbers are here, and they paint a picture of a market that is fundamentally and profoundly stuck in the mud.
Stuck? I see a picture of absolute foundational strength. Read the room, Cole. Look at the summary for the moving averages, the indicators that smooth out the noise and show the powerful underlying trend. What does that signal say? Read it aloud for the people.
The moving averages summary says strong buy, and that's like congratulating the Titanic on the great speed it was making right before it met the iceberg. It's a lagging indicator, Sonny. It tells you the party was great. It doesn't tell you that the party ended an hour ago and you're the only one left.
It is the deep current of the ocean. It shows the conviction of the market over time. But fine, you want to talk about right now? Let's look at the oscillators, the tools that measure immediate momentum and sentiment. What do they say? They say neutral. This is the most bullish combination possible. You have a confirmed strong buy on the long-term trend, and all the short-term speculative froth has been blown off. The market isn't overbought, it's calm, cool, and collected, resting on a bedrock of strength. This isn't a stall, it's a pit stop.
This is a massive red flag. The overall summary, when you combine the lagging past with the pathetic present, is just a buy, not strong buy. The strength is actively bleeding out in real time. The fact that the long-term trend is screaming go while the immediate momentum is screaming meh is a huge divergence. It's a warning sign flashing on the dashboard. The engine that drives the price, momentum, has completely stalled. The bulls are out of gas, but because they're coasting at a high altitude, you think you're still flying.
It's a coiled spring. It is the definition of healthy consolidation. You want to see a market find its footing and build a new floor before the next monumental leg up, and this is exactly what that looks like. The underlying power is confirmed, and it's just waiting for the next spark. This is the Launchpad.
It's a bull trap. It lures in the optimists who only look in the rearview mirror at the moving averages, while the real-time oscillators are telling you the road ahead is washed out. A market with no momentum is a market that's vulnerable. It's resting, but it's resting at the edge of a cliff. That's not a launch pad, Sonny. That's a stalemate right before a fall.
That's all for this episode of Rekt Radio. I'll be here, enjoying the view from this beautiful, stable launch pad, waiting for the ignition sequence to begin. Stay bullish.
And I'll be here urging you to look at the dashboard, not the rearview mirror. The engine has stalled. Don't get caught admiring the view when the car starts rolling backward. Be careful out there. You've been listening to Rekt Radio.